So I think that's the perfect lead-in to our next panel, and I'm thrilled to introduce our VP of Customer Success, Preet Narisetty. Preet is going to lead our next conversation. So, Preet, come on stage.
Hi, everyone. I'm Preet, and I lead the customer success team at Modern Treasury. It is my honor to moderate the next conversation for you. While the team sets up behind me, I thought we could take a quick moment to ground ourselves. You all have heard a lot of information today, from big ideas to fast-paced innovation to what's next in the world of payments. Before we continue that trend and talk to our panelists, I would like to welcome you all to join me in a short breathing exercise. This is going to help me just as much as it's going to help you. So, if you are in for the ride, I will lead you through it. Get comfortable, relax your shoulders. If you're sitting, sit up straight. If you're standing, stand up tall. You can do this whether you're here or tuning in online. And feel free to close your eyes if you'd like. And we'll do 3 cycles of deep breaths in, hold, and deep breaths out. So we'll start by breathing out, emptying your lungs, and then I'll guide you through the 3 cycles. Cool? All right. So deep breath out. Let's begin. Deep breath in. Hold. Deep breath out. Again, deep breath in. Hold. Deep breath out. And last time, a deep breath in. Hold. Deep breath out. Thank you. All right, let's begin. Let's get into it. I have 3 folks joining me today who are going to help us understand what it means to go through the transformation of bringing on instant payments. So you all have heard of instant payments. You've heard of automation, real-time settlement, and modernizing payments. These aren't buzzwords. These are actual ways that organizations are transforming the way they operate, grow, and serve their customers. The 3 leaders joining me have been in the thick of this transformation. We have 3 panelists. Our first one is Bob Taylor. Bob is Vice President of Centralized Escrow Accounting at Stewart Title. And in his role, he oversees Stewart's escrow banking operations. Our second panelist is Jonathan Spinetto. You might have seen him up on the videos earlier today. He is the COO and co-founder of NFTYDoor, which is a fully digital home equity line of credit origination platform. Jonathan and his team have built an automated platform that allows their customers, borrowers, to complete their lending experience entirely online. And our third panelist is Cheryl Gurz. Cheryl is Vice President of RTP Product Management at the Clearing House. And in her role, she is focused on driving product adoption and usage of the real-time payments network. Please join me in welcoming Bob, Jonathan, and Cheryl to the stage. All right. I want to start by defining what modernizing payments is. Each of you probably has a slightly different definition of what modernizing payments is and how that applies to your organizations. So I'd like to get each of your perspectives on it. Jonathan, I would love to start with you. What does modernizing payments mean for you and for NFTYDoor?
Well, I think I'm one of the panelists up here. You guys saw my video earlier, so all my answers, you already heard everything I'm about to say, but I think we can add some additional flavor to it. But yeah, earlier I was talking about its speed, right? Because our process, the borrowers are coming to us because they want certainty, they want speed. And really, RTP is what's delivering on that promise to them, because it's not just a Monday through Friday thing. It is a 7-day-a-week, 24/7 opportunity for us, and RTP delivers that.
Bob, how about you?
So I come out of the title industry, which is we're involved in the home buying, selling process. And if you look at how the vast majority of settlements happen in title industry, it's checks and wires. So if you bought a home recently, the way you settled money in 2025 was the same way it was done in 1975. There has been a ton of innovation in remote closings, documentation, market analysis. No innovation at all in the settlement process. So what that means is in 2017 or so, when real-time payments came out, that really sparked innovation across the board, where now we have the first alternative to Fed wires. And it's taken some time, but you see 2 or 3 years, past 2 or 3 years, there's been a lot of fintechs to come out with really kind of cool solutions. And so for us, what payment modernization means is an all-of-the-above settlement approach: ACH, real-time payments, FedNow, and anything, whatever the use case dictates, whether it's speed, cost, it's an all-of-the-above modernization and enhancement of our payment capabilities.
Okay, so we just got the perspectives of 2 corporates. Cheryl, you've worked with several companies. What have you seen modernizing payments mean for those companies?
As the payment operator, bringing up a brand new system, faster and speed is in everything. You know, people look at payments and they think they're modernized when they use Zelle, when they use PayPal, when they're using other instruments. But that's not necessarily the new modernization from our point of view as an operator. It's really about instant. And what instant means that settlement and clearing are together immediately. That you don't have to, every other payment type is a clearing and then you settlement. So putting those two together and using an ISO 20022 format where you can really enrich the data, to me, is what modernization is about: how to get the payment rails to be able to support the speed, but also in more data to enrich longer term as we get more and more comfortable with this, integrated into many different business processes. And I also feel the other 2 things that I hear all the time is the 24/7. Some of you out there that might work on payments, you know, the dreaded deadlines for those ACH files, what time is that FedWire close? You're out in the West Coast, you have such early cutoffs. All that is gone. You're up at 2 in the morning, Pacific time, you can go make a payment. There is no banker's hours per se, and that is exactly what the customers I talk to and what we see as a network, the real benefit, and along with payment confirmation. So our networks on the instant side are the only ones that truly give you gentlemen back confirmation, just like UPS or a FedExpress confirmation it's been delivered. No other system does. You send it and you're kind of hoping. And someone says, oh, I'll give you a FedWire reference number. That means absolutely nothing, because that community bank teller went home at 2 in the afternoon, and when she gets back at 9 the next day, she might post it. So those are the positives on a modern transformation journey for payments.
Okay, so for anyone in the audience that is not sure of what the positive impact of going down this journey of automating payments, having real-time settlement, having 24/7 settlement, instantaneous settlement does for their businesses and their consumers and their customers, I would love to get your stories, Bob and Jonathan. What has this meant for your business? And more importantly, what has this meant for your customers?
So in title, we are regulated at the state level. So we have 50 different state regulators that have 50 different ideas about what good funds laws mean. And so in our world, instant payments meets all of the characteristics of FedWire. In a real estate settlement, you want finality, irrevocability of payment, and you want same-day settlement. So instant payments gives us a better consumer experience meets the definition of good funds laws. Now, there's still work to do at the state level. It's a complex array of rules that we have to follow, but and we'll get there. But it gives us options for the consumer and for us to not be constrained by the hours of the Fed, to have an instant payment, better consumer experience, and meets all of the definitions of the way you would want to settle a real estate transaction.
What about you, Jonathan?
Yeah, no, I mean, our business is focused on a HELOC, which is a home equity line of credit. So it's a mortgage that is going to be against the property you own. It might be your primary residence. It might be a second home, might be an investment property. But really, where we're focused on is this digital experience that starts from the moment your information is being put into the computer, through AI and automation of underwriting, through document generation, depending upon the state that you live in, following the rules and regulations of the state where the property is located at. And then we have this really cool, remote online notarization process, right? So you could sign your paperwork on your phone using your camera on your laptop. And it's a digital signature, and you're on camera, and you're doing, you're getting your loan. Where we looked at and we said, okay, well, we need to continue this, delight and surprise methodology, and that's where RTP came in for us, is because now certain rules say, for example, if it is your primary residence, you have what's called a 3-day right of rescission, right? It's a federal right. So you can change your mind. But once that right expires on, say, Friday night, because it only expires on business day, what we're able to do here is with RTP, Friday night, that right went, and then Saturday morning, you have the funds in your account before you've had your first cup of coffee. And RTP allows us to continue this theme, right? Which is it's speed, it's convenience, it's certainty. You get the notification probably right after your bank just gave you a push notification on your bank app saying you have your funds. And again, it's people just don't see that in the mortgage industry today, and it's really, again, just one of the reasons why borrowers and their loan officers, also more specifically, continue to come to us because of that overall experience.
Okay, so we just heard what it's done for your businesses. If you're in the audience and you want to go on this journey for your companies, you might be wondering, okay, this is an investment. How do I know this is going to work? So Cheryl, I'd like to start with you. You've seen this transformation happen across many industries and many organizations. What signals should one look for to measure or know that this investment is returning something positive?
We really see two distinct business monetization opportunities. The first in many is a new revenue stream. Our very first adopters, PayPal, Venmo, there's a press release, so I'm not saying anything out of school. Any of you that might use them, when they offer you an instant payment, you have to pay a nice little fee. And many people are doing that, and that is where their product managers really saw an opportunity that their customer base values an instant payout, and they'll pay for it. So many of our large 50 dispersers on the network today, we do last month we did over 35 million payments, so that's touching 70 million people because you have the sender and the receiver. 90% of those are charging a fee. So I don't think it's going to happen in the mortgage. I don't think it's going to happen there. But there are many industries. We have merchant settlement providers on there. We have gaming. We have P2P. Different places that the ROI is all about new revenue for just making a payment that they've done forever. The second ORI is really about back office operational efficiencies. So any of you that might be using ACH today or card, there's disputes. You're not getting good funds. You're going to have a chargeback. You're going to have 90 days later a customer having buyer remorse and taking that money away from you. And things like a real good example of that is in the the car loan business when you pay off your loan and you pay the auto finance company and you're doing your last payout for $15,000 because you want a clean title. And many of them give clean titles out, and then you dispute the payment. They were given the title. There's a lot of bad people when you start looking at payments. And so now you have a RTP, they require an RTP, and what happens is they don't have any losses, and they don't even have to deal with, you don't have the money in your account, because it's not just the losses of dispute. So much of ACH, people don't have the money in, they have to keep representing, they can represent 2 more times. That's back office cost, and the same with chargeback. So because there's no such thing as a day 2 concept, a lot of operational efficiencies in your ROI.
Okay, so additional revenue streams, decreasing costs by introducing efficiencies for the back office folks. Jonathan, what have you seen? Have you been able to measure the ROI, or are there signals that you're seeing that clearly tell you that this investment has paid off?
You know, absolutely. I mean, ACH can be the cheapest form of, sending funds, but really, again, mentioning here, you don't have the insight of, okay, is it settled correctly? We've seen odd circumstances before, but RTP gives us that certainty, right? So it's continuing that theme of the speed of what we're delivering. And again, an RTP is, of course, is cheaper than sending a wire, right? So again, just leveraging everything in there of what it's allowing us to do. And we've even expanded now, and there's certain B2B components of our business where we're working with other mortgage companies, and we need to send funds and RTP now that we have this, $10 million, limit, which again, bank imposed, but now being able to go above the $1 million before in a B2B scenario, our default method of sending is always RTP, right? Again, it's from a cost-effective standpoint, just really allows us to keep our margins in line, that speed. Again, we love it. It's great.
Bob, what do you think? I know you're on a slightly longer journey of this transformation at Stewart Title. What has been when you look back at the work that you've done so far, what has been the sentiment around it, and what do you look forward to as you continue along this journey?
So ROI in our world is it's a little bit hard to quantify. On a revenue side, we have to be very careful because there's a lot of costs we can't pass on to the consumer. It's state regulated. But the hard thing to quantify around revenue is, for any title company, a real estate agent is a major source of revenue through deal referrals. To the extent that we can become the provider of choice because we're easy to work with, and we can pay that realtor their commission at 8 o'clock at night through an RTP where they're sitting on their couch and they get a notification that their payment's in their account, that leads to real revenue. But in our journey, the most eye-opening thing was on the cost side. So as we went through the cost, especially around cost of writing checks, the baked-in cost for everybody thinks about, okay, my check printer, ink, postage. But in our world, what we talk about as a realtor, we want to get their money to them as quickly as possible. And we have a lot of examples like this where we write a check and then we send it via courier. We write a check and we overnight it. And so there's a ton of cost for checks. On the back end of that, now I have to monitor those checks. It's very common in the title world that you get a refund. It could be a recording fee refund or some kind of refund. So now I have $1.50 in a file, and I'm obligated to get that money to the owner of the funds. And so I write a check for $1.50. I put that in the mail to a seller, and the seller doesn't cash the check. Now I have a team of people that go behind that. They monitor that check, and then they contact that seller, and they say, hey, you didn't cash your check. And they'll say, okay, well, I lost the check. Can you send me another one? So we cancel the first check, send them another check that they don't cancel or they don't cash. And now I have to hold that funds and monitor it and do the sheet process, the unclaimed property process. So I have this 3 to 5 year time frame where I have a balance, a $1.50 balance that I have to do something with. To the extent that we can do all of those electronically, all of that back-end operational support, all of the infrastructure costs around that goes away. And most title companies do it that way. They write checks for refunds. So whether it's RTP, whether it's ACH, an electronic settlement for those types of refunds it's a big impact on the ROI.
I can't even imagine the reconciliation headache that comes with tracking the check after the check after the check.
That's exactly right. It's reconciliation. It's just the data systems that I need to monitor unclaimed property. There's a lot of cost with that. So.
Okay, I'm convinced. I want to go down this journey. I've got my business. I'm ready to go all in. what does the actual implementation look like? Ideas are great, execution is super hard. So I would love to get your experiences on what it's like going on that journey. What have you learned? What would you like our audience members to know ahead of time so they don't have some of those same challenges? Cheryl, I'd love to start with you. What have you seen in your experience as the implementation challenges, and how can folks get ahead of them?
There's two implementation challenges from two different points of view. One is getting the banks on the network, right? Your first implementation challenge is to make sure that you're working with a bank that actually has access. Most people don't realize there's 9,000 financial institutions in the United States. So right now, between us and FedNow, the other instant payment provider, we have about 1,400 of those banks on the network. So it is not an industry mandate, a government mandate like other countries around the world. So it's a market-driven, and every bank has to make their own decision and add a payment network. And we have most of the major banks on the network, but we have the long tail of the community and credit union organizations. So for them, we work very closely, letting them know that this is table stakes now, that all of you require it, that your customers want it. And before, their thought was, when it was first, we've been up and live for 7 years. When we first start rolling out, it was like, oh, fear of doing it, right? A strategic, oh my goodness, I'm not going to do it. Now, basically, our discussion with most of these remaining banks are, this is table stakes. Your competitors are all using, and your customers just walk across the street. I've talked to Uber drivers that have actually told me that they leave their bank and walk across the street because it's 2 o'clock in the morning and they are trying to get an instant payout and their bank isn't on it. And they know through their friends and why do they want these? Because they go get gas and they continue. So there's many reasons that these customers are leaving. So the bank side is its own set of challenges. But for all of you that aren't banks, it's mostly what bank do you work with? How do you find your bank, hopefully your relationship bank that is easy to help in the implementation. The implementation should not be as hard. You have modern Treasury. You have many different banks that have worked and designed APIs and integrated files and online. So make sure you find the right partner. I think that's the most important thing.
Jonathan and Bob, I know you've had two quite different experiences in implementing instant payments within your business and business model. Jonathan, I'll start with you because you've taken this approach from the early innings of your company. Mm-hmm. What was that experience like? And then I'll come to you, Bob, where you're going through this transformation in a very established business. So, Jonathan, what has it been like for you? What challenges have you noticed, and how have you mitigated them?
Yeah, no, I mean, it's when you're starting this and you're whiteboarding to say, okay, we know what the journey is for a mortgage origination, the components related to that, and then the end result is funds in somebody's account. So not only did we say, okay, well, part of our journey was to build a platform that could bring that consumer through the journey, the loan officer through that journey, transparent, certainty, et cetera. But we had the opportunity to be able to survey the market and say, okay, well, we know that as part of our program, as much as we love this RTP component, that we may have to use other rails as well. So where can we, what could we do to find a solutions provider that allowed us to have not just this ability to utilize RTP, but if we need to then default because their banking institution doesn't take RTP yet, to ACH, or then even default to other methodologies of payment as we've expanded our programs like debt consolidation as well. And when a lender says, well, you have to send a check to a PO box, and this is the only way that they're going to receive, that payoff or pay down, and it's like, oh my gosh, what am I doing here? But anyways, so for us, it was a great opportunity to have a provider where we could just code once and send in many different ways. And I think again, you saw some things earlier today about how that's extending beyond just even the traditional fiat rails into like stable coins, which I would love to be able to figure out how to bring that into the mortgage world in a way, and I think the future is awesome with that. But not having to come from this legacy system really gave us the idea to say, okay, how can this be efficient and clean, but still be that multimodal transmission. So you have all those different payment rails in there. And again, you get the certainty and the settlement. And that's, again, just one thing we love about, especially with modern Treasury. And then, of course, just delivering on that consumer experience that they want.
I have a quick follow-up question, and Bob, I'll come to you. You mentioned the multimodal payments experience. How do you handle scenarios where RTP isn't available? And Cheryl, you mentioned there's 9,000 financial institutions. Adoption isn't 100%. It's growing rapidly, but it isn't 100%. So as a quick implementation detail, how do you handle the multimodal options?
Yeah, no, so we have a waterfall. So the computer is going to look to see if that routing number in that account can take RTP. But if there is a fail, it will fail out to ACH. And then there's some other waterfalls as well. So for example, when the payments initiate every day at 7:30 a.m. Eastern, we know if a payment is a borrower's draw, broker commission, is a payment because there's delinquent taxes and the tax authority needs a check. We know if that payment is a pay down or a payoff because we pass all that metadata from our platform through the Modern Treasury API. So our payments are already categorized by the loan, categorized by the type. So from a reconciliation standpoint as well, and that waterfall, we know that the IRS, because we do have people that pay off an IRS lien that's on their house, IRS ain't taking RTPs, guys. So I want to change that, but right now it's a check to a PO box, United States Treasury, and the computer knows, okay, that is going out by check. But again, being able to, that's all going through one API from our system into Modern Treasury, and it again just gives us that waterfall and that that choice of payments.
Bob.
So much automation by the government, but they can't stop the checks coming.
So we do a lot of tax payments as well. And I'm thinking, okay, FedNow, this is your opportunity.
Yeah, I know, right?
What's it been like for you, Bob?
So I started out talking about there's been so little change in payment capabilities in the home buying process. And along with that comes just limitations in legacy product systems. And it's very practical issues like in your legacy systems, you don't have the capability to call a transaction an RTP or instant payment. Most title production systems don't even have the option to call a transaction an ACH. So legacy systems is probably been the hardest thing for us to go through. And it's upstream and it's downstream. And so as we're trying to implement various payment rails, there's all kinds of things that we've had to do on both ends of the transaction to just, process the transactions completely. That's been by far the most difficult issue for us. And then we live in a multi-bank environment. We're a national title company. We have dozens of bank relationships. And even though instant payments, ACH, all of those things have been out there for years, every bank has different capabilities. They have different APIs. They have different SFTP type transactions. And what we're trying to do with each bank is we'll do an instant payment API, an ACH API, and an information reporting API. That's where our Modern Treasury's really helped us with that because they have the experience with each bank. They know which ways are the best ways to do for each best ways to go for each bank. In some cases, we're doing SFTP. Some cases, we're doing API. So navigating different banks' varying capabilities has been challenging. And we didn't have that knowledge in-house to get through those processes efficiently.
Okay, we just talked about the world of modernizing payments, what it can do for organizations, their customers, how you can measure success along the way, what does the implementation journey look like. I want to come to each of you as we wrap up this discussion for what you would like these audience members to take away as one important final thought. So, Jonathan, I'd love to start with you.
Well, I think again, you've seen the video, you've seen a lot of me today, but think of it this way: is that RTP for us it's a feature of our product, right? I mean, our rates as a home equity line of credit, mortgage lender, we're very upfront about this. We're not the cheapest, right? And again, there's a reason. Just think of like what Instacart says, right? And that's a big comparison I make to people in our industry. And they say, okay, well, tell us, how are you different? We're the Instacart of home equity loans, right? Sit on your couch, watch Netflix, do it all on your iPhone or Android device, and the money will show up as fast as we possibly can from a regulatory environment, right? Again, that 3-day rate of rescission. But when you think about how we architected this, that RTP is a feature, right? And to the consumer, they don't want to know about all these different rules and laws, and they just want the money in their account as fast as possible. And that's where, again, it's the capstone of a very real-time economy experience. And definitely, it's amazing to be able to offer that in this day and age, because we're taking that traditional title mortgage space and we're saying, hey, no, this can be fast, this can be digital, this can be dynamic. So just, don't be afraid to use it as a feature of a product, because it can be very beneficial in that way.
Cheryl, key takeaway?
The U.S. was one of the last major economies to even adopt an instant payment network. So we have been very much focused as consumers and businesses in using old technologies. It is the digital economy, as all of you know. And in a digital economy, instant and fast is what is required from yourself and your customer base. My call to action is that all of you as a consumer should try to use one. The minute you get used to it, you're going to sit there and you're going to figure out, how do I now bring this into my organization and bring it into the business environment and find ways to enhance my business model by either finding new revenue sources, interacting with your customers differently, and having back office savings.
Bob, the final word goes to you.
All right. So what I would say is, right now is probably the most exciting time I've had in my business career, because you can truly see how payment capabilities can transform the home buying process. So, the ability to do instant payments, not be constrained by the hours of the Fed, it's really an exciting time to be involved. And at some point, it will be adapt, adopt, or die for title companies. We've had this revolution going on around payments for the last 20 years with Venmo and PayPal, and it hasn't made its way into our industry. And we have a whole generation of people that have bank accounts and no checkbook. So it is very, very exciting, not an easy journey, but it's one that you either do or you're not going to be around. So
Thank you so much, Bob, Jonathan, Cheryl, for sharing your stories, your insights with us. Thank you all for joining us. I hope you took away some new ideas about what's possible, what's next in the world of payment operations, especially instant payments. Thank you. Enjoy the rest of Transfer.